Alrighty, next thing up here, stocks I will buy, sell, moves I'm thinking about making, all that good stuff. Let's talk about that. Okay, so I put this in the Palantir chat inside my private Discord chat here today. I said I just sold my Palantir hedge in my private portfolio also right now. I no longer am hedged against the stock. Stock might have more downside ahead, but I just don't feel super comfortable betting against Palantir. The fundamentals are just so ridiculously strong. And yeah, that's the thing with Palantir, like the valuation's insane, but I was able to get out of that with a profit. And I was like, I got a nice profit here. Let me just take this and put this into some long positions I like now at this point in time. So yeah, I'm no longer betting against Palantir stock from this day moving forward. Doesn't mean it can't go down more. So do keep that in mind, right? What about my hedge on Tesla stock that I have in the public count? Now up about $7,000 on that in a pretty short amount of time. Listen, I have no rush in regards to getting out of this particular position. And the reason being is Tesla is still trading at a really high valuation, but it doesn't have the fundamentals to back, right? Whereas Palantir has very strong fundamentals. Tesla doesn't have it. Like, in retail's buying the stock left and right? And this is not a good situation. Like, look at this. JP Morgan reported its retail radar report on Wednesday that retail shareholders just bought more Tesla stock than they sold over the past week by about $1.1 billion. So retail's still funneling money into this just furnace of a company. Look at the stock since 4 years ago. You lost 1% over that time, right? Has nothing to show over the past 4 years. And that's despite retail just flooding in their entire net worth into the stock. And it still has nothing to show for it. It's the only stock of Mag 7 that you've taken an L on, right? Amazon, Microsoft, Meta, Apple, Google, Nvidia, all big money makers. And Tesla's the only one that's an L of the bunch, right? And it really comes down to the fundamentals of the company are a mess over there. It's not like it's just down because it happened to be down or because it was overvalued. It's down because the fundamentals are really bad at this company. Look at this. This just came out a few hours ago. U.S. Consumer Protection Safety Commission. Tesla recalls Powerwall 2 AC battery power systems due to fire and burn hazards. Risk of serious injury or death. Tesla's recalling Cybertrucks again. More pieces are falling off of the Cybertruck, right? Cybertruck was supposed to be this great selling truck that had so much hype, and the sales numbers have just been one of the saddest things you could ever see in history, right? Tesla continues to tank in China when it comes to their China sales. Tesla sales in China dropped to 26,000 vehicles in October, their lowest in 3 years as a U.S. electric vehicle maker struggles with tepid demand in hyper-competitive market. Sales fell 35.8% from a year earlier, down from September's figure of 71,000 when Tesla began delivering Model Y L, a longer wheelbase, and a 6-seat version of its best-selling Model Y SUV, now only available in China. That's a disaster. So the Chinese market, which has been so important for Tesla, is just getting worse and worse for the company, right? Sales in Australia have fallen off a cliff. They only sold 916 EVs in Australia in the month of October. When it comes to their European business, in Sweden, Tesla registered only 133 new vehicles in October, a nearly 89% drop from a year earlier. That's insane. Sales also plunged 50% in Norway, 47% in Netherlands, 30% in Spain. I mean, it's just a mess. Like, the European business is a mess. Their China business is a mess, right? Tesla attributed early softness of the Model Y production transition, but even after rolling out the refreshed version, momentum hasn't recovered. In Germany, Europe's largest EV market, battery electric vehicle sales jumped 38% for the first 9 months through September, yet Tesla registrations fell 50% in the same time frame. I mean, this business is a dumpster fire. Like, it's almost shocking how bad this is. The fact that the battery electric vehicle sales could jump 38% in Germany and Tesla registrations would go down 50% on the same time frame, like, it's insane. Like, this might be the poorest run business I know of in the world right now, right? Then the U.S., obviously the EV tax credit just expired. What was that, 2 months ago now at this point in time? And what we're finding in the Google Trends data is anything Google Trends related for like Tesla has fallen off a cliff now. Look at this, Tesla Model 3 in the past 12 months, boom. As soon as that EV credit went bye-bye, straight down, right? Tesla Model Y, same exact thing. As soon as that EV credit went away, boom, straight down in regards to that. So the business is a mess around the globe. Meanwhile, you got Elon Musk out there trying to pump the stock as much as he can. He goes on Joe Rogan all the time. Went on a year ago, went on 8 months ago, just went on again 13 years ago, right? And this man needs to focus on his business. His business factually is a dumpster fire, right? Revenues are trending the wrong way for the company. Earnings per share has fallen off a cliff. Their sales in basically every single market's bad. And, but going on Joe Rogan, it gets him a lot of views. And, he talks about all these big things, and people will send me clips that don't follow the stock market. Be like, oh man, Tesla's going to do this and that, right? And they get all excited about the stock, and so they go buy the stock. But meanwhile, what he should be focusing on is business. So he actually had good fundamentals, right? And in regards to Doge, I don't even want to talk about that. I was going to talk about that, but it's not even worth it, right? It's not even worth it. So the moral of the story is in regards to Tesla, that's a dumpster fire. Palantir is not a dumpster fire. Palantir's fundamentals are amazing, and that's why I feel comfortable still betting against Tesla if the market goes down. I don't feel as comfortable betting against Palantir. You look at Palantir here. Palantir revenues grew 77% year over year. This is what a growth company should be doing. U.S. commercial revenue grew 121% year over year. It's insane, man. Palantir's revenue in general grew 63%. The cash and cash equivalent short-term investments, U.S. Treasury securities, now up to $6.4 billion. Their margins are exploding higher. Their profitability is exploding higher. That's a real company right there, right? So what are some stocks I bought? What are some stocks I'm thinking about buying here? So bought 100 PayPal shares here today in one of my private portfolios, about a $6,500 move. I bought, we can call it about $6,000 worth of, or $5,000 and some change worth of Cheesecake Factory here today. I bought 22 shares of American Express. I released a very in-depth American Express video recently on the channel. I want to buy companies that have great fundamentals, right? American Express has great fundamentals. Doesn't matter what's going on in the economy, what's going on out there. American Express comes in and puts up their numbers. Phenomenal, right? Cheesecake Factory, they come through with their numbers quarter in and quarter out. Even in a very tough environment that we've had this year with the consumer, right? Cheesecake's still growing the business. They're still growing revenues. They're still growing earnings per share, right? Heading in the right direction in regards to that business model. So, great fundamentals on that and unbelievable runway of growth the next 5-10 years. PayPal. Despite everything going on, they grew revenue 7% in the latest quarter. They're expected to continue to grow earnings per share at a double-digit clip. They're buying back massive amounts of shares. Great fundamentals at these companies. That's who I want to be in. I don't want to be in stocks that have the hype. I don't want to be counting on, is there going to be a hype cycle? Is everybody on X going to be talking about this stock? Is everybody on YouTube going to be talking about this stock? I want to buy great companies that are going to produce me results regardless. I don't want companies that I need them to go on Joe Rogan for the stock to move. No, okay? I want to buy great fundamental companies. Nike, this is one that's clearly turned a corner in regards to it. And look at it. The market got hammered today. Dow was down like 800 points. NASDAQ got hammered here today. Nike was up almost 3%. Did anybody see that? That was interesting, right? Now up about 7% in the past 5 days. Nike has clearly turned the business from a fundamental perspective now at this point in time, right? And so, Nike has a lot brighter days ahead, and that's a company with great fundamentals now at this point in time, right? Cava's interesting. They've got a proven business model, right? Their restaurants are now proven. They've now gotten to profitability, right? And they got tons of long-term growth potential here. So Cava's interesting to me. I'm not ready to buy it, but I'm getting closer to that place of this might be worth, buying this one. Chipotle. I talked a lot of trash about Chipotle a couple years ago, right? That stock's crashed 50% since I was talking all that trash, right? And actually, Chipotle's gotten down to a level now that I'm like, might actually be interesting as a buy in 2026. So that's what I'm actually looking at. I'm looking at the income statement. I'm looking at the balance sheet. I'm like, okay, proven business model, proven restaurant concepts, right? And the stock's down massively. That might be a stock I'm willing to step in 2026 at some point in time, right? Look at it over the past year. It's just been decimated. Stock is down 47% in the past year, right? Bath & Body Works, as a $21 stock right now, stock's down 23% in the past 3 months. Proven business model. Doesn't matter what's going on, weak consumer, strong consumer, so-so consumer, Bath & Body Works comes through, puts up numbers. Super low PEs on that stock. I mean, we're talking about forward P of 5 or somewhere around there, 5 to the 5 and 6 range. No one cares about this sort of stock, right? Because everybody's been so caught up into the hype and what stock has the most hype. But I'm looking at Bath & Body Works, I'm like, that looks pretty good. I love a great fundamental business, right? And Bath & Body Works has it. Keep in mind, if the economy was to get worse and interest rates were to drop substantially over the next 6 to 12 months, if that happened, that's no guarantee, but if that happened, do keep in mind with a company like Bath & Body Works, for their debt load, they would actually be able to likely refinance that at much lower rates. And so that interest expense could actually drop for the company significantly. And so that's just something to keep in mind in regards to a company like Bath and Body Works. And people don't mind financing a company like Bath and Body Works because they've got a proven, very profitable, sustainable business model, right? Estee Lauder, this one's clearly turned a corner. Now it's up almost 40% in the past year. The business has completely turned around. Great fundamentals for the next 5 years, I would say, if not the next 10, 20 years. And so Estee Lauder, very attractive stock. I know it's up a lot from where it was a year ago, and especially from those April lows. And it's still a great buy. This stock will be $300 plus long term, right? Elf Beauty, this is a stock that's been hammered over the past month, down almost 45%. Elf Beauty's got a great future. Tarang's done an amazing job running this company. And, their days of glory again are coming in regards to the stock price, right? Everything's going to be what it's going to be in the short term in regards to this, but the fundamentals of business look phenomenal, right? They got the price increase that's going to start to really positively affect them this next quarter, they'll report. Additionally, they have the Rhode Beauty growth that's going to start to very positively affect them next quarter as well. A lot of these one-off expenses that they've had to go through, like that's going to come off. And then they got the international growth, and their products are priced in a way that they're going to sell regardless of where the economy is. If the consumer strengthens over the next year, if they weaken over the next year, if they stay the same over the next year, Elf will be able to put up their numbers. So I really like that one, okay? For the pinned comment down there today, I'm going to put the application if you're looking to apply to join my private stock group, private wealth group, all that good stuff. Remember, January 1st, we're moving to $100,000 minimum net worth to join in there. So if you're under 100K net worth, you might want to get in there before January 1st. And also, we have our new lifetime membership card for anybody that joins on a lifetime membership. Usually just get your Steel membership card for 1000X and your private group Steel membership card. But now if you're a lifetime member, you get the black card as well. So do keep that in mind. And then we're now up to 2,849 members of the private group. So I'm thinking about potentially closing the private group to new members when we hit 3,000 and then opening it back up at some point in time in, let's call it 2026. The demand's been overwhelming in there. Just yesterday, we received another 100 applications after receiving 500 applications last week. It's been ridiculous. So that's going on there. Pinned comment down there if you're looking to join us in there, okay? Alrighty, guys. So, hated stock. It is Honest. Honest is such a hated stock. Everyone seems to hate this stock. It's $2.50 a share, down 47% in the past year. Listen, okay? No one's actually doing the work on Honest. No one. They're not even paying attention. They're just hating on it and just selling it and just Like, it's a bunch of lazy bums in regards to this company. They don't understand what's going on. They aren't listening to conference calls or any of that stuff. So let me do the work for everybody. Okay, somebody in the class has to do the work for everybody. I guess it's me. Okay, listen. Consumption growth for their total wipes portfolio was up 24% versus category growth of 3%. It's unbelievable outperformance of their wipes business. It is on fire. Honest flushable wipes consumption grew over 160% versus the category growth of 2%. 2%. Unbelievable. And at Amazon, Honest adult flushable wipes are the fastest growing flushable wipes with subscriber growth of up more than 100% year to date. Incredible, right? Now, I know Honest isn't like the sexiest business and we're talking about diapers and wipes and, skincare products and things like that. At the end of the day, I love growth, right? I love growth. Now, in regards to this, our baby personal care collection is the #1 natural baby personal care brand in the United States, with consumption growth up 10% in the quarter, outpacing the growth in the category, which was up 2%. So another huge outperformance by Honest. Within baby personal care portfolio, our sensitive skin collection grew consumption 77% year to date. Consumption is so important because you got to understand, with these big retailers, whether it be Amazon, Target, Walmart, whoever, right? Big customers of Honest. Sometimes these companies place massive order. Now, that massive order gets eaten through over time, right? But essentially the consumption is what's really important because that's like somebody actually buying the product. So there's like sell in and then there's sell through. Sell in is like, okay, Target places some massive order, so we sell into them, right? Now Target has to sell through that. Consumption, we're talking about sell through. And so those metrics are really important because that's going to let you know where revenue is going longer term there as those companies then place bigger orders in the future and things like that, right? Now, additionally, I thought this was really important. They were talking about the winding down of these businesses they're looking to get out of, right? Which are like low margin distraction businesses, right? So basically talks about with the growth program, focusing on core categories of wipes, personal care, and diapers, and the exit of low margin, non-strategic categories. Honest.com, they're talking about will wind down by the end of the year, and then they'll be pivoting to a call for a pass-through site to sales. The Canada business, which they're looking to get out of, we expect to wind that down by the end of the year as well. And they're also exiting their apparel partnership. They had sold baby clothes and stuff like that, right? And they're exiting that as well. Baby clothes just doesn't seem like a very high margin business. So they're going to get all that done here at the end of the year, which I like. I didn't know if that was going to drag into next year. I'm glad they're just getting out of that and piecing out there, okay? Additionally, this was very important. So they're talking about margins for the company and things like that, right? So they talk about, they just had their highest gross margin delivery of over 40%. The exit of these non-strategic categories, which is once again, honest.com, the Canada business, right? Canadian business, and then also the clothing business. The exit of these non-strategic categories is about 20% of the business, and these businesses are well below our average gross margin. And again, that gives us confidence that when we get into new business, that we have a strong potential to drive growth in 2026. And we're happy to share more details about 2026 when we get on the earnings call in February. A macroeconomic environment, blah, 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 right? So what's going to happen with Honest, essentially, as they get out of those businesses is gross margins are going to continue to go higher for this company. Now, they're also going to be able to likely drive down SG&A as well. So what you're going to see is a dynamic here with Honest that's very, very exciting, ladies and gentlemen. You're going to witness Honest get back to growth in 2027, but in 2026, you're going to watch the company's margins actually go higher as they exit categories, right? And additionally, you're going to watch their bottom line get to a healthier place because they're likely going to likely cut quite a bit of SG&A out of that business, right? And cut quite a bit of employees because those businesses were bad margin businesses that weren't making them any profits, and if anything, were costing them money, right? And now they can focus their resources on high margin businesses that actually have growth because they have several businesses. This company has several businesses that are amazing businesses, right? And even the diapers business, that was like the down business during the quarter, right? Listen, the diapers business, people didn't even read through the conference call or listen to the conference call. That's because last year at this time, two of their big retailers had a big mega sale on diapers. So the diaper business looked like the growth wasn't good, but it was because of what happened last year, essentially. I'm sure if those two companies did massive sales again for their diapers, I'm sure it would have been just fine. So you got to put in the work. People could use 1000xstocks.com. It's right there for you. But people would rather surf TikTok. It's embarrassing. It's embarrassing, man. They'd rather surf Netflix than just actually do the work. Maybe you should have read through the Honest transcript. Maybe you should listen to a conference call and actually saw what was going on here with the business. But they don't. They see the stock price going down. They're like, oh, sell. Oh, let me take a 30% loss in the stock. Oh. And then, a few years from now, Honest is going to be $5, $10, $15 a share, and they'll be thinking about the shares they sold at $2.50. It's just ridiculous, man. But same old game. So I'll put it to you like this, right? In regards to Honest getting out of some of those bad businesses, like for instance, selling baby clothes. Okay, dude, I've had 3 kids. You know what happens with baby clothes? People just look for whatever's cheap and whatever's maybe cute and they buy it and then they never rebuy from that brand again. There's no loyalty to that, right? These are the 2 main skincare products I personally use, okay? One's this Estee Lauder product here. That's pretty expensive. And the other one is this Honest product right here, okay? Those are 2 main. I'll switch off. One night I'll use this. One night I'll use this, right? This is the sort of product you want to sell. That product there, Honest probably makes that for a few bucks. And then they can sell it for 15, 20, 25 bucks, right? And additionally, people will buy this product again and again and again and again and again. Unlike baby clothes, for instance, that they're not going to do that, right? And so this is a beautiful business, no pun intended, in regards to Honest. And this is where they want to focus their attention. And then they can use their marketing dollars rather than on the Canadian market, that's not a good market for them, or rather on baby clothes or honest.com. They can use their marketing dollars on selling more of these. And they sell more of these things, right? That's very good for their margins, which then gives them even more profits that they can market even more and they can continue to build this high margin business rather than trying to focus on these businesses that suck, right? Let's focus on the good businesses that are going to bring us more good business. That's good business, right? And so that's Carla. These weren't businesses Carla got into. You know, when Carla took over this business a few years ago, that was business they were already in. The Canadian market, Honest.com, right? The baby clothes business, like that wasn't her choice to go into those businesses. So that was like Jessica Alba and the old team that used to be, there. Carla, like she's gotten this company from almost bankruptcy into where they're at now. And now she's just taking it to the next level. And she's like, we got some crappy businesses that I inherited, and we're getting out of those crappy businesses. And so I love it, man. I love it. So Honest right now is a market cap that's in the $200 million range, which is just silly. Because the way I look at Honest, this looks like this company will do $20 to $30 million in net income in 2027 and beyond per year, right? And I think that's very doable. So I would say Honest right now should be a bare minimum $400 million market cap. Bare minimum. Because that puts you at about a 20 PE. That's assuming they do 20 mil, which is low range. That puts you at a 20 earnings, on 2027 numbers. And 2027 be here before you know it. I mean, heck, we're almost in 2026 now at this point in time, right? So that's the bare minimum this market cap should be right now, $400 million. I could make a strong argument that the market cap should be $600 million, over double what it is right now. Given that this company is going to be a company that will bring in $20 to $30 million bottom line in 2027 and beyond, right? And then there's a pretty strong argument you can make that it should actually be $800 million, because what I have here, it could be a lot higher long term. Okay, now that they're exiting these crappy non-margin accretive businesses and they're focusing on the high margin businesses. So Honest, very misunderstood stock. And people don't put in the work, and so they've sold the stock relentlessly, including another 4% here today, and they're all going to regret it, like in my opinion. We'll see. Maybe I'm wrong, but I actually do the work. I actually, look into this stuff. I actually going through the conference call and listening to it. I'm going through the transcript. I'm like, okay, this. I'm putting all the pieces of puzzle together here, and the puzzle looks pretty freaking good. But, people would rather just sell it at $2. Okay, sell you $2 chuck, Then we'll see where things are at 3 years from now, and I think you'll be crying.